Hello, everybody. It's Saturday, and we have an interesting show for you today as well. Every day is an interesting show. Lots of new learnings. Let's jump into it. I'm feeling pretty drained, so let's just try and make this happen. I don't know why. Maybe it's the cloudy weather here today or something. But anyway, let's get into what happened this week. And not financial advice. Thank you, by the way, T&D Tesla, Sean Donnelly, K8, and everybody in here as well. And from Sarua 3285, make sure I can read this carefully. Join Patreon now. So much extra information, yes, and the good stuff too. we don't want to share everything, so we do keep a lot of good stuff just for Patreon only. Let's look at what happened over the last week. It was a weird week. We have a lot of, how do I say, I always describe it as being lids on top of the actual market keeping things in check. But Tron did win the week compared to Bitcoin. XRP, what is that thing doing there? But anyway, the week so far has been pretty nasty. And normally, weekends are for pumping. But this one kind of sucks. We saw Ethereum fall a massive 7.5%. A lot of people thought Ethereum is going to go to the moon. It's like, no, it just went through crazy sell pressure yesterday. Massive cascading liquidations, something like I haven't seen happen for Ethereum in years. Again, I shared that post on Patreon yesterday. Everything is pretty bad, pretty weak, but there is some good news out there, and we'll try break it all down. Let's look at stocks. They held up much better than crypto over the last week. You can see all the usual names. By the way, I will be doing a special event on AI stocks through 2030 soon. But you can see here, the reason I talk about AI stocks is because they are going to garner the most return guaranteed over the next 5 years. So make sure you have positions. But Tesla up 2.6% for the week. NVIDIA up 1%. Apple up 1%. And Apple struggling to stay relevant. We'll talk about that in a minute too. Meta down, Google down, Microsoft flat. Yeah, Berkshire down a little bit. We'll talk about them too. Some weird news as well coming out this week. But first of all, the big exciting news. And some people always joke about peer-reviewed papers. If it's peer-reviewed, you can take it to the bank. Well, I don't know, but we'll see. This was worth touching on. But basically, the risk and financial management organization, or whatever they are, came together, and they put together a study of Bitcoin. And they believe Bitcoin will hit $1 million by early 2027. Whoa. That's super interesting. So I read the paper, as you do, and I tried to understand kind of where their conclusion comes from, because, we got 100K now, 3 years from now, 2 years from now, depending if it's early 2027, that's a big jump. But they talk about, again, the very cap of Bitcoin, 21 million coins, which is really only 15 million, worsened by halvings, reduced issuance. And if there are multiple purchases of about 1,000 Bitcoin or greater, this could amplify price surges due to very low liquidity. This is code, ladies and gentlemen, for supply crunch. Every time I say supply crunch, people go, oh, God, supply crunch, never going to happen. Bitcoin, it's only 100,000. It sucks. Yeah, those people exist. Believe me. I mean, people are frustrated. Bitcoin's 100 grand. Anyway, good luck in the traditional markets. But that was kind of interesting, that piece. And then they talk about institutional accumulation. As I talk about treasuries, institutions, but also sovereign entities coming in fast. And they will literally lash into whatever supply of Bitcoin there is, which will nix supply even more. Because when the sovereigns buy, you never see it again, just like Michael Saylor. And this 30x demand shift with sustained big buys could push the price to $1 million by early 2027. And they also used an analysis for the demand-driven surge using CES, which is, I think, constant elasticity of substitution. I know a lot about macro and micro and math, and I never heard of that until today. But anyway, that's okay. But the rising demand as a macro asset with these big withdrawals and the demand multiplier of 30, which is like my 21 to 42, boom, they must watch my stuff, projects Bitcoin to $1 million by early 2027. Who's ready for that? Drop a comment below if you are. It could just be a big hopium hit again, but I'm sharing news. And listen, let's just break it down real simple. A sailor has bought the next 3 years of supply. BlackRock the next 6 years. And if I say BlackRock bought, then people say in the comments, it's not BlackRock, it's BlackRock's customers. Yeah, we know that. Should I just call them BlackRock's customers instead of BlackRock? Anyway, people sometimes are very funny, or not funny, as the case may be. But yes, these two players, as I analyzed in the video, I think it was yesterday or the day before, I don't even remember, two players snagged 9 years of supply. What happens if a sovereign comes in and starts grabbing Bitcoin hand over fist? What happens if the US does build that strategic Bitcoin reserve? Boom. $1 million by 2027 is definitely within the realm of possibility. So hold on tight. It's going to be fun. And yeah, we know the price is suppressed. We know all these buys happen OTC. Therefore, we don't actually see the price action happen to what happens on typical markets. But that's okay. Eventually, that will run out, and eventually we'll go to the moon. We just have to be patient. So that was the big hopium hit of the day. But there's lots of more good news. Move myself to the bottom right here. Bitcoin spot demand, as I've been saying for a long time, it's gone, which means nobody's buying Bitcoin spot. This is the most negative demand ever on record, which tells you retail is not there. This is all institutional, all OTC, not a retail game. Okay? Oh, I got to move myself as well because you guys see the red going to the world time record ever lack of Bitcoin spot demand, which is bonkers. And there's a little bit of good news, though, however, with this. And over the last week, the long liquidation dominance metric has grown from 0% to 10%, while Bitcoin is held within a very narrow range of 103 to 106K without any significant price corrections. Well, I should say 102,500. Let's check out the live price. As I'm talking to you here, 102,700. So $300 less than 103K. What's $300 between friends? Not much, all right? So don't shoot the messenger. But the point is, if the long liquidation dominance rises by another 5 to 7%, there could be a high probability of washing out bears from the market. And once the metric begins to decline, this will become the turning point and indicate a reversal in the futures market sentiment in favor of the bulls. We're going higher. So basically, with all the stuff that's going on in the geopolitical scene around the planet, which I will not talk about, Bitcoin has been extremely resilient. Okay? Once that air clears, dust clears, cloud clears, whatever you want to call it, boom, could be exciting. I'm ready for that. Anyway, more treasuries. Shout out to Bitcoin historian. The Trump advisor Nakamoto company increases total fundraising to $763 million to buy Bitcoin. That's another $1 billion, ladies and gentlemen, pretty much. And sometimes they get oversubscribed. These treasuries are insane. Insane. Somebody said, well, the treasuries are just like 100 million people buying $5,000 worth of Bitcoin. Yeah, there's only 55 million Bitcoin wallets. So no, the treasuries are still massive, massive. And this week, what happened? Woohoo! US debt. And I got to aggregate all the debt around the world for all the different nations. US debt hits $37 trillion. What do you notice about this chart? Okay. It's insanely vertical. Okay. If this was a stock, you'd want to own it, or even a crypto. It's bonkers. but it shows you your fiat is going to zero real fast, real fast, real fast. 37 trillion is a number unimaginable. If you asked me, was that possible when I was 20 years of age, nearly 35 years ago? 35 years ago, I would have said, no way, impossible. Well, here we are, 37 trillion. Soon, I will be reporting $40 trillion, probably within the next 12 months. Bonkers. Now, related to that too, stablecoins, and you're beginning to see the whole end game. Not only do banks want to get their claws into stablecoins so they can operate more effectively and more efficiently, but stablecoins could continue supporting demand for the US dollar if they run globally. And people like Scott Bessent is very aware of that. And this also could help them. The demand for their dollar means they have the ability to issue treasuries, which means as well, they have the ability to fund the government, which internally could also reduce borrowing costs and also help the national debt, which is a massive problem. You're beginning to see very clearly now how everything is completely related between Bitcoin, national debt, fiat currencies, and stablecoins. Stablecoins are massive. And here the two you see are Circle and Tether, both huge. In fact, Toly came out this week and hinted that stablecoin supply could hit $1 trillion. It's already over 250 billion, which is $250 billion. So it could 4x from here. Remember, the world is going digital. Absolutely, stablecoins will hit $1 trillion market cap. Absolutely, at the pace at which they're growing. Absolutely with the need. And absolutely the fact that the US dollar, even though it's garbage, melting ice cube, it's the cleanest shirt in the laundry, believe it or not, with the exception maybe the Swiss franc. Shout out to our Swiss friends out there, if you're there. Now, the Circle IPO is nothing short of amazing, and I have to do a little mea culpa. I have a little bit of a discipline where I historically have been watching IPOs for 35 years, and I've seen that most of them go down. And I was busy the morning of, and I didn't get a chance to buy the Circle IPO, which I could have on Robinhood, and they had it available for like $37. I didn't. I missed that opportunity. But remember as well, in investing, you can't catch them all. So I just want to say, missed it, but this has been nothing short of amazing. It does look like it's running out of steam, but boy, has it been bonkers. And that's just in, 2 weeks? Absolutely crazy. And that's why stablecoins are huge. And Circle needs to put some of their profits into buying Bitcoin like Tether do. That's what I would do. And not the only thing that's booming, the Solana economy is completely booming. Absolutely off the hook. The dApps are now doing over $1 billion plus in revenue for 2 straight quarters. And we also have over 3,200 monthly developers and nearly $1 billion in quarterly revenue as well. It's off the hook. Now, if you take Solana and use a traditional metric, it's trading at about 15 times sales when you add in the dApp revenue plus the actual blockchain revenue itself, which is very, very cheap. There is no other chain remotely like it. And yes, it's a mystery the price is so low at $140. But hey, markets can stay irrational longer than you can stay liquid. So be ready, because one day risk will happen fast like it did before. It'll do it again. You just have to wait for that moment. So stay patient, my friends. And Bloomberg say that there are now 95% approval odds of the Solana ETF. And Eric Balchunas and James Seyffert are sure of this. When they say 95% from two pretty conservative guys, that means it's in the bag this year. So again, just be patient, ladies and gentlemen. And follow the devs. I always say follow the devs. Here we see some crazy statistics that the number one chain on the planet is Solana. They have now 7,600 new developers, 83% year-over-year growth, and 3,200 monthly active developers, more than any other chain, including Ethereum. This is where the growth is happening. This is where the development is happening. If you want to build something and you want to build something good, do it with the easiest box of Lego, which is Solana. Crude analogy, but there it is. And the ETH ETF did take a little bit of a dump yesterday, about 11.3 million in outflows after a crazy last 6 weeks of inflows. So it's selling off a little bit, and that's probably part of the trigger for some of the big cascading liquidations we saw yesterday on Ethereum. Bitcoin was up just a shade. Now, let's get into a couple of stocks too. Berkshire Hathaway has been underperforming the S&P 500 by a 10% window since Warren Buffett said he's going to retire. So the market does not like the fact that Warren's going to retire, or maybe just the stock is down. I don't know. But they do have $360 billion in ice cubes melting away, which I think sailors said it's costing them the bones of $3-4 billion a month, which is insane. Craziness, but don't hold fiat. But, you know, at this stage of the game, he wants to, I guess, retire on a win and not lose and not take on any risk that he doesn't have to. But as I said, I think it was a year or two ago, he could have crowned his legacy of being an absolute genius by just deploying into things like Tesla at $106 and Bitcoin at $30,000-$40,000 with all that cash. Can you imagine where it would be now? It'd be the hottest stock ever. We'd be clamoring over buying Berkshire Hathaway. Anywho, speaking of Tesla, and shout out to Sawyer Merritt, who's on his way to Austin, Texas, to ride in the robotaxi tomorrow. But this is a cool little post from him. It talks about the Muskonomy, the Musk economy, Musk Industries, whatever you want to talk about it. But Tesla's saving lives at FSD every single day. It saved me from a little scare where a car ran a red light yesterday and the car broke suddenly. I didn't even see the red car coming. It broke. And I was like, what the hell? I thought I slammed on the brakes by accident. The car stopped. This is 2 days ago. I was shaking afterwards. But if it was me driving and not the car, actually, it was me driving, but the car broke. So if it was not for that, I probably wouldn't be here today. Or maybe not. Anyway, and Neuralink is also improving lives with game-changing brain chips. It's going to make people see again, think again, hopefully one day walk again. Or those that are otherwise impaired, they can at least be much more active in life. And SpaceX, Starlink has now been deployed, of course, across the planet and, of course, in every big plane. And the new AI and Grok is empowering lives, and X is providing people with information, real-time news, etc., that you cannot get anywhere else, by the way. If you are depending on mainstream media for your news, you're going to be led very much astray. But the point I'm trying to make here is all of these companies are currently worth $1.5 trillion, and they are all part of colliding S-curves, all hitting at the same time. And again, have exposure to some of this. AI is going to be massive. I'm working on a little study as to how big it's going to be over the next 5 to 10 years. Because I'm seeing a lot of desperation within companies like Meta, etc., that Apple, that they're trying to get exposure to this AI stuff because they're late to the game. And they will pay hundreds of billions to get exposure because they know they have to be on the train. So if the big corporations, the Mag 7, are thinking like this, why aren't you? That's the question. Anyway, moving on. Speaking of AI, Grok 3.5 will try to reason from first principles using physics-based tools and minimize error and seek truth. As Elon says, math and physics will keep you honest. You cannot bend the rules of those two sciences. This channel happens to be about math, so I kind of like that. And this approach is critical for AI safety. The goal, apply the logic of physics to thinking itself. Brilliant. And he spanked Grok 3 yesterday for answering something which is based on it learning off mainstream media, which is full of BS. Interesting. And speaking of Sol, a little bit out of order here, but we're in between kind of crypto and treasuries and more of that convergence that I've been talking about all year. Upexi, the largest Sol bag, 679,677. Shout out to Milkrow to put this together. DeFi Development Corporation, 621,313 Sol. And Sol Strategies, 420,706. And then you got a couple of other companies too, smaller ones. But the point is, there are Bitcoin strategy companies, and then there are Sol strategy companies. And then if anybody embarks on a journey of being a Coin X strategy company, their stock tanks right away. So It's good to see there's only two. And Cantor Fitzgerald, a firm in the know that managed the bag of Tether's Bitcoin, 100,000 Bitcoin plus, they did an analysis on not only Solana, on how they believe it's the top L1 blockchain, but also the top treasury companies. And their top pick on top of those top treasury companies is DeFi Development Corporation. Boom, with a price target of $45, 75% upside. At the time of writing, I think DeFi Dev is about $25 now, so that's more than 75. Anyway, moving on. U.S. car insurance, a little bit of inflation news, macro news is up 100%. Why do I care? Because autonomous vehicles and Tesla have the answer to this. Because their cars don't crash or crash at a fraction of the rate of typical cars, they can afford to insure them at a lot lower price. And that's just part of the future. But the cost of ownership for vehicles between servicing and repairs and insurance and fuel and everything else is just bonkers. So this is why when autonomous vehicles are on the road, people will not be buying cars as much as in the past. In fact, as Jeff Lutz, I think, has said a few times, we are way beyond peak auto. There will never be as many cars sold as there were 2 years ago or 3 years ago, whatever it was. So that is all changing. So as car insurance goes up 100% in the US over the last 10 years, coffee falls to the lowest price of the year. Yay. I can save some money there and buy some Tesla shares. With my savings and a little bit of economic pain, there's a lot of infighting going on right now between Jerome Powell and the U.S. administration. Howard Lutnick just ripped into Jerome Powell saying what you're doing is really, really bad. You're crushing everything. But the long bond yields are rising globally. Rate cuts have to happen. But even if they had to happen, nobody wants to buy long bonds anymore. Look at the UK and the US in blue and pink, nearly approaching 6%. Nobody is touching that garbage. It's toxic waste. As I think it was Charlie Munger said, or Warren Buffett, it's rat poison squared. That's what these long bonds are. Rat poison squared. Unbelievable. Be careful out there, everybody. Stay away from that trash. And Apple, considering everything is converging, Apple are trying to stay relevant. It's a cool study I saw yesterday. And they picked the top 40 companies through 2030. Apple didn't even make the list. It's funny, I made a video a month or two ago about the new Mag 7 in my view. Need to update that. I didn't have Apple in there anyway, thank goodness. But Apple now are in early talks to partner or acquire Perplexity AI. And these AI companies, they know what they have, and they are not willing to sell. They're going to hold out as long as they can. They'll partner, but they're not willing to sell because they know what they're worth. They know if they can wait 1 or 2 more years, the valuation will be worth double, triple, quadruple what it is today. They just need to hold tight. So watch the space. And shout out to Jim Cramer, meme du jour. All of a sudden, he's all over the place. 2 weeks ago, he said it's a must own. Now he says Tesla might not be the best place to put all your capital, from Kim Dramer. And that means, everybody, because this guy never fails, he never misses. Whatever he says, just do the opposite and you will win, everybody. We are mooning, boys, for Tesla. Great news. And girls, of course. Hope you all enjoy the show. I'll see you tomorrow for the Q&A. Thank you as well to TND Tesla and Sean Donnelly, K8. Have a great Saturday and talk to you tomorrow. Bye-bye.